right. Okay. All right. Hi, everyone. Welcome to our webinar. And we will be waiting another minute or two as attendees start piling in. Please give us another minute as we get on. All right. So just for everybody, we will be having a Q&A session towards the end of the webinar. So we will be going till 1:30, and then from 1:30 to 1:45 for increments, we'll be having a Q&A session. So everybody, if you have any questions throughout the webinar, feel free to post in the Q&A. And then, instead of posting in the chat. All right, we actually also enabled the chat, and let's see who we got today. If you could just put in the chat where you're joining from, so you know from which areas we got people coming in from. We got quite some people coming in. Let's see, I'll be going first. We're in Spring Valley, New York. Alrighty, we got another New York. Where do we go? Where else do we go? Brooklyn, nice. What else? Long Island. All right, you got New Hampshire. That's cool. That's cool. Valuation, also New York. Looks like New York is winning. We're getting a lot of New York. All right, we got Detroit. That's cool. All right, everybody, we will begin. And I first of all want to thank everybody for joining and taking the time to join the webinar. My name is Nachman Tim. I am the CEO and founder of Connect Books. My background is I've been doing accounting already for 12 years. I've graduated from Dickinson University with a master's degree in accounting. And for the last 7 years, I have been specializing in e-commerce accounting. Now, Connect Books is an accounting automation tool. The idea is we aim to provide clarity for sellers who are looking to understand the financials. And Connect Books, what it does is it would integrate to Amazon and send the data over to QuickBooks. I have the honor of having Tim Nelson from Avask join us today on the webinar. And just a little shout out about Avask. Avask is an accounting firm that will help you. They will do the bookkeeping for you. And one of the ways they will help you doing the bookkeeping for you is by meaning they would use Connect Books to automate the bookkeeping process, and then they would provide you a clear set of books. What I could say about Avask, I've been working them closely already for a full year, and I would say that the word perfection is not even good enough for you. Like their books are perfectly good, and they are really perfectionists, and they really make sure that whatever they do is correct, and they make sure that the books they give out right. So that's just a little small intro about Avask. And Timothy, why don't you go ahead and introduce yourself?
Sure. Hello, everyone. Again, as Nachman said, my name is Timothy Nelson. I am the CEO and partner here at Avask US. Avask, again, is a global accounting firm where we help people who are selling, especially through e-commerce, anywhere in the globe on any platform. And as Nachman said, that we try to be perfectionists, whether it be through bookkeeping, like using Connect Books, whether it's your tax returns, whether it be business or personal, and through sales tax. We will file those returns for you as well. We've developed our own software for that sales tax. I've written a book about sales tax. Don't worry, don't read it unless you need to fall asleep. Maybe you could read it, but it's just that we're the experts in the field. And when people come to us at Avask, they want to make sure they're getting everything done perfectly. And I think that what's great about this webinar is through our search of trying to do everything perfectly, we've came across Nachman and the Connect Books. And we found it as an essential tool in what we use here to provide the services that we do for our clients.
Alrighty, sounds amazing. So we will be kicking off our webinar now, and we will go into the topics listed out on the landing page to discuss. Before I actually begin, I do want to say that today is a special day because today is my birthday. So if anybody wants to wish me well, or you can post in the chat, happy birthday, I'll be very appreciative. Alrighty. So our first topic is going to be to discuss today is profitability by SKU. And I want to just go into saying what the important aspects and what does profitability by SKU mean. So first, let's explain it on a basic level. And the basic level is if you're an e-commerce seller and you are selling a lot of different products on Amazon, the first thing you'd want to do is understand profitability on a whole on your business, meaning how much is your business making money? Is your business making money? Is your business not making money? That will be the first question. But then when you want to start digging in a little deeper, let's say, for example, last month your business did not make any money. So then the question is, which products did make money and which products did not make money? That's always the question. And what we have built on ConnectBooks is we have the reporting and the ability to break down the profitability on a SKU level. And that will include storage fees, fulfillment fees, commission fees, ad spend. We have the ability to break down every single fee that Amazon gives, break it down, break those fees down per product, and then show you the profitability by SKU. So I just want to dig in a little deeper and explain the differences. So I know that Amazon has something called a revenue calculator. So I know people would say, and I will just give you like a story that I've had with any previous clients and just explain why using a third-party tool to verify your profitability by SKU is important. So I had this customer that was using the Amazon revenue calculator. And on the Amazon revenue calculator, it was showing that they were supposed to, let's say, make $5 a unit profit. However, they actually never made that money. You know why? Because one of the things the revenue calculator doesn't take into account is returns. Returns could be a very big killer in a business. And we can take it even a step further. Let's say if I buy a product from you for $10, and let's say it cost you $5. So when you sell me the product, I give you $10, you made $5 profit. When I return the product to you, the question is how much money did you lose, right? So we can say that you lost $5 because that was the profit. Why did you lose $5? Because you gave me back 10, right? But I also gave you back a product that the product is worth $5. However, if I give you back a product ripped up in a box that you can't resell, and that's going straight in the garbage. So when I return the product to you, how much money did you lose? You didn't lose $5. You actually lost completely $10. So understanding the returns, how much money you lose in the return, well, these certain returns, so these reports in Amazon, which will tell you the condition of every single return, whether the return is sellable or the return is not sellable. And one of the things that ConnectBooks does when we run a profitability by SKU, we will tell you, okay, this product, let's say, had 20 returns. So from the 20 returns, 5 of them were sellable. So you lost X amount of money, and the other 5 are unsellable. So you lost X amount of money there. So there's a lot of stuff that you will not find in the revenue calculator. And for example, returns is one of them. So when I have my client telling me, like, I was signed to go to a certain product, I would say, look, hey, you're not making money in this product. He's like, what do you mean? Let's go to so I asked him, who told you were? He's like, what do you mean? I'm using the revenue calculator on Amazon. I said, that's very good, but let's compare apples to apples. So we took the revenue calculator on one side, we took ConnectBooks on the other side, and I said, look, returns is something you never accounted for. Or, for example, advertising. They don't know what it's going to cost to advertise. They don't know what it's going to cost to take the product off the shelf. Or if you decide one day to run a coupon, or you decided to run a promotion. I've seen people do very well on Prime Day, but I actually seen a guy who doubled the sales on Prime Day, but he made less profit than a regular day. Why? Because he put in a coupon that was giving a certain percentage off, but based on he upped his ad spend for Prime Day, plus he put in a coupon to gain a lot of sales. So in that case, the sales increased directly a lot, but the profitability was actually less than a regular day-to-day profit. His profit margin was down. So what I'm trying to highlight is using a third-party tool that captures every single fee, captures every single refund, every single reimbursement, captures all the different ins and outs from Amazon to tell you the detailed profitability is really key to defining success. Just by relying on the revenue calculator from Amazon or by imaginary data that you have and not having it completely automated, that will not give you the real clear picture. So that's what I want to highlight is it's really important to understand, what the profit is on the SKU level, and just to make sure that, you are being profitable on every single SKU. If you're profitable on every single SKU, your business as a whole is definitely going to be very, very, very profitable. And I would just share one other story because I like sometimes to share certain stories that I had with clients, and because it really reflects, the business. But we had a different client that at some point and I only heard from the story much later on, like after, once the success was done. But the problem was they had $500,000 in their account. And all of a sudden, slowly, the money started dwindling. and they really had no clue what was going on. So they started setting up connect books and getting everything in place and starting to work on everything. And then they started realizing, one of the things they started realizing is that certain products they were losing money at. Now they were using a different tool to really analyze the data, but the tool was not capturing every single fee. For example, the tool is not capturing the losses from Amazon, like reimbursements or other stuff where Amazon claws back reimbursements, or for example, the refunds and the unsellable refunds. That was something the tool was not capturing into, and that had a huge impact. And at the end of the day, they saw that they're losing money on Amazon. So what did they do? When they saw that this product is really losing money, they had no choice but to increase the price. Now they were scared to increase the price because based on the competition. But once they saw they're losing money, they're like, so what's the point? Let's increase it. They actually increased the price, and guess what? They're doing very well today, and the bank account is up to the proper numbers. So I just highlighting the importance of really understanding, the profitability by SKU. If anybody has any more questions on this, just post in the Q&A and we'll get back to it towards the end of the webinar. All right. Our second, before I jump to the second thing, Tim, is there anything you wanted to add in on this topic, or you want to just go to next?
Now, jumping into the next topic is actually going to be a perfect lead into what you were just talking about.
Right. So the next topic is, we're going to be discussing timely and accurate financials. And this is really more Tim's area, and I'll let you take it away.
Yeah, and I'm going to build right there on what Nachman was just saying about profitability by SKU. Again, I'm a certified public accountant. I've been doing this for 20 plus years, and I've had so many different financials come across my desk, especially when preparing tax returns or advising clients on what their financials are. And in talking with these clients, I'd say their number one complaint, besides maybe wanting to make more money, is that they're not getting their financials timely. They're not getting it quick enough so that they can make decisions. And again, as Avask tries to build and improve on what they're doing, using Connect Books has helped with that in a tremendous way. Why? Because now we can give financials to our clients a lot quicker, very accurate, so that they can make decisions. Decisions on what? First, what Nachman was just saying, profitability by SKU. That's great. They can analyze which products are making money, which ones are not. That's a very important thing that our clients like to talk about. Second, it affects taxes. Again, that's my area right there. If you don't have timely, accurate financials, you don't know if you're making money, how much money you're making, or if you're losing money. And like most of my clients, when you own your own business, you have to worry about estimate taxes. And you have to pay them in quarterly, and knowing or having a
the
good
thing I
idea.
hate.
I hate it as well, but I'm sure it's what everyone may have to deal with here, especially if you have profit, is that we have to pay an estimate taxes. And the last thing I want any client to have to deal with is that you get to the end of the year and maybe you thought you were only making a little bit of money and you make a lot of money. That's a great thing. Everyone's happy about that, except when they speak to me and I say, okay, you're going to have to pay X amount of taxes. And it's a big number, and it hurts. Even though you make all this money, it's not a nice thing to have to see come out of your checking account. And so having those estimated taxes accurately that you're paying throughout the year so you can break it up helps a business plan better, especially when you're looking at cash flow. Now, getting those timely, accurate financials can be a little tricky, especially when you're selling on different platforms. We were just talking about Amazon. They break down things very well. And ConnectBooks does a fantastic job in helping us import that information to put it on people's financials so that when we walk through the financials with our clients, because honestly, most of our clients aren't 100% sure what they're looking at when they get financials. Something that we do at Avask is that we talk to our clients at least on a monthly basis to try to walk through them at least their profit and loss. Here's what this is saying. Here's what it means. Here's why you're making money. Here's where maybe where you're losing money or your spending went up. Having that breakdown, that nice detailed breakdown, is a big thing that clients really like. And different platforms give different types of reports. And actually, my team and Nachman, we actually work really close together, especially regarding other platforms, because most people sell on different places. And getting the software to work correctly and make sure we're all grabbing everything correctly is something that they do a fantastic job, whether it be eBay or Amazon or Walmart. TikTok is a new one that we're working with. It's a wonderful thing. And getting your financials quickly so you can see, how am I doing on this platform? How am I doing on that platform? Am I making money? What's the SKU that's really selling well? All that is so important to get it timely so that you can react and make good educated decisions. It is
I
just
think
so important.
I think that's really the key is reacting properly because I talk a lot of times to clients and we deal with a lot of bookkeeping firms and timely financials I would say is one of the most highlighted parts because I always tell somebody today is July 24th. What's going to help you if I tell you last year December you lost $50,000? Really nothing. But if I tell you, let's say July 15th, that June was not the best month and as he's mentioned before, you go over the monthly financials of the clients and you show them exactly where they're losing money on, then what they will do, they have enough time to really, turn around the wheel and make sure that July doesn't look the same way.
Yeah, agreed. But also, let's say they also get incorrect information. I've come across many financials that a client was using a non-e-commerce accountant. Let's put it that way. Somebody that just doesn't have experience, but they figured, hey, don't worry, we could do the bookkeeping. We know what we're doing. And now they're given information that is just completely incorrect. And they were basing their decisions off those numbers by just using an inexperienced non-e-commerce accountant. And so using somebody who understands the market is really important. And I'd say that the biggest mistake I see out of people who, let's say, don't use an e-commerce accountant, let's say with Amazon, what bookkeepers will do is they'll just pick up your revenue as whatever gets deposited into the bank account. I've seen it so many times that, hey, yep, that's my revenue. This is what came into my bank account. That's my sales. Let's file a tax return with the IRS. And in 2 weeks, that client gets a letter from the IRS saying you owe $30,000. And the client goes, why do I owe $30,000? Because their bookkeeping wasn't done correctly, because they didn't pick up the gross number or the total number of sales they actually got. They just only picked up the money that was paid to them by Amazon. And the thing is, IRS knows how much Amazon paid you. They know. So they're looking for that number on your tax return. If they see a lower number, they're just going to charge you tax on the difference. And it happens more often than not. So using an accountant that understands e-commerce, using software that helps you break down that information to give you an accurate financial in a timely manner, I think is probably one of the most important things an e-commerce seller can need.
Yeah, that's definitely amazing. I would just add on one little aspect is when taking on experienced accountants and they pick up the whole deposit as revenue. Number one, if you have an Amazon loan, that sometimes they don't even know that exists, which that needs to be taken out of the equation. But also one of the things that you really want to see is why your numbers broken up by month. So one of the biggest challenges with Amazon is that this first month, let's say, would start January 20th and finish February 5th. What you want to do is you want to break up the financials and have your numbers, whatever belongs to January in January and whatever belongs to February in February, so that you have proper accrual-based accounting. And then when you look at your January numbers, it actually reflects on, what happened in January. It's not just based on what comes into the books. I can't really stress how important timely and accurate financials are. As I said before, it's I think it's probably the most important thing because if you get your numbers late, then there's not really much you can do. It's not going to help you what happened 6 months ago. Meaning you still have to file your taxes and you might need a bookkeeper to really catch up if you haven't done your books for the last 6 years, which we see sometimes. But I was saying is that having your financials like in the beginning of every month for the past month and really knowing is really key to success because everybody makes mistakes and nobody's perfect. And if everybody would know what the future would look like, then everybody would be rich. So obviously you want to be able to really reflect fast enough on what happened. And once you can reflect fast enough on what happened, you have the time to change around and make the proper decisions, do everything and take care of your estimated taxes and take care of all those other stuff.
Nachman, if I could just add one more thing on what you were just saying, you brought up a great point. I'm not sure if this is going to apply to anybody here, but if you haven't done your bookkeeping for X amount of months, maybe even a year, it's never too late. Trust me, we can go back, get it done, and get it accurate so that when you go file your taxes, it can be filed correctly so you don't pay too much tax. The key thing is it's never too late to go back and file it, to do the bookkeeping or file taxes or anything like that. Don't worry about it. We run across it more than you would think. I've come across it so often. People, it's like, I haven't looked at my books in 10 months. I haven't looked at my books in a year and a half, haven't filed anything. It happens all the time, but it can be fixed without a problem.
Now, that's really important to know. So our next topic is going to be a pretty interesting topic is how much inventory should I carry? So this is a very interesting topic what we are going to be exploring. Canaplex is going to be exploring a lot more. We are in the middle of rolling out a lot more features on inventory, which is currently going into testing now. But the $1 million question is, and when I review a financial statement and you want to make sure the business is healthy, so let's say, for example, a business does, let's say, 100,000 a month in sales, and they have, let's say, their Amazon fees. Let's say they stay over $20,000 in profit. Wow, very nice. The business made $20,000. Now the question is, one of the biggest, I would say, losers in business where people lose the most amount of money, especially with a small business that is inventory based, is inventory. And, when you want to, let's say if somebody was to hire, let's say a bookkeeper, right? You could pretty much get a sense what bookkeeping is supposed to cost you on a monthly basis. You'll call 5 different firms, you'll get a quote from everybody, you'll try to negotiate your best price, and you'll try to be as efficient as possible. So most of the times when I look at small businesses, their overhead is very much usually efficient. Like they know what they need to pay on, their employees. They know what they should be paying their outside labor. The only thing that they really don't know is inventory. Why? Because when I tell them, hey, I got a deal for you here. Buy this product, it's $50,000. You get X amount of units, and you'll make the 100% markup in 2 weeks. So everybody jumps. The problem is that not everything you buy actually sells. Everybody has products that don't sell. Now, when you look at when a deal comes to you, everybody's always busy jumping on deals. But hardly, at what point do I say, okay, I have too much inventory. Let me try to shed off some inventory of what I have. Or how long is this inventory laying in my business? That's a very important aspect. So the real question is, how much inventory should you carry? At what number do we say? Like the same way as you understand when I tell you, hey, last month your business lost $10,000. The same way we want to be able to say, hey, your inventory is hitting to a high level. You should not be having so much inventory in hand. And let's really not kid ourselves. Let's say, if you have a lot of inventory and that inventory is really laying around for 6 to 12 months, really that should be written off. Now, maybe you don't want to look at a P&L, it won't look nice, you might not be happy. But in reality, what I would say a decent seller should not be carrying more than 3 months worth of inventory. So then the question was, how do we measure that? What metric do we use to put in place to understand what the 3 months of inventory is? So if you use, let's say, I've asked for your financials, at the end of the month, you would get a P&L. On the P&L, you would have a line item called cost of goods sold. Cost of goods sold is the cost of that month's inventory that's sold. So let's say you do on Amazon $100,000 in sales. Amazon, let's say, deducts $40,000 in fees. Now, let's say the cost for that inventory that's sold in that time frame is, let's say, $30,000. So that means in 1 month, you sold $30,000 worth of goods. When you look at your financial statements and you look how much your inventory asset is worth, your inventory should not be more than $90,000. You should not be running more than 3 months at most. If you're bringing it from overseas, you would, let's say, for example, China, maybe you want to go 4 months, fine. And if you're sourcing local, 3 months is way more than enough. And if you're buying inventory that's sitting more than 3 months, I'm not sure if you're really paying attention to what you're buying. So the point is, you want to move stuff very fast. And the real answer to what moves stuff, obviously, if you're in the furniture industry, it will take much longer. So what I would say is the best way is to evaluate. What you should do after the webinar today is look at your products and say, what is the optimal or the least amount of time I need to keep products in my storage, to sell them? Like, how much time does it take from when I place my PO till it gets approved? And once the manufacturer ships it, so when I receive it, how long will it take it to prep it, send it to FBA, and how many sell a day, and how many do I need to keep in stock? And the idea is that you want to always try to take your cost of goods sold number from your P&L and make sure that your inventory is not more than 3 times that amount. I've seen people have 6 to 8 times that amount easily. Like if you're selling 200,000 worth of goods, I see a lot of people running 1.2, $1.4 million of inventory. My question is, what are you doing? Like, why? Try to slow down a little bit, because also just remember, if you're running $1.2 million worth of inventory, means you have 6 months worth of inventory tied up. So really, you could be making the same amount of profit with half the amount of inventory, because you don't need to keep such a large stock. You can be having a stock of 600,000 and still make the same amount of profit. And you know what you can do? If you have an extra $600,000, you can buy a piece of real estate. These what to do with the money. You don't have to really tie it in. So what I always find is that people have the hard time defining the proper number and getting the proper trigger. And what I've seen is 3 months, that's a proper number. I would just add an interesting quote. Everybody thinks always that you're supposed to be like huge and you're supposed to have like a million SKUs and you're supposed to do everything in order to be successful. I read an article that Costco, which is a public traded company, their stocks have been going up like crazy. They actually only have 3,800 SKUs. If it's true or not, I mean, it makes sense, because if you go to Costco, pretty much all of them sell the same stuff. Their thing is buying power, and they give it away dirt cheap. But their turnover rate, by the way, is around 12 times. So Costco, something would not sit on the shelf more than a month. And that's the biggest part of their success. So if you're going to try to sell at Costco, they're not going to buy from you 6 months worth of inventory. They'll buy what they estimate they can push in a month, and if not, they'll ship it back to you. But once they figure out how much they can push in a month, that's what they carry. And actually, so a different interesting article, Walmart, for example, their turnover rate is only 8 times a year. Now I'm talking about what Walmart purchases in the store, not the marketplace. So Walmart, let's say, spins over their inventory not every month. They're a little bit slower than Costco, but Walmart carries 250,000 SKUs. So Walmart has such a complete different variety of SKUs. You can find every odd and end at Walmart, but Walmart also, they're not keeping 6 months on hand. If they flip their inventory 8 times a year, you're talking around 6 weeks of inventory. So every product they buy, they know that if this doesn't sell within 6 weeks, then this is garbage and we're not going to buy this again. And I think that's really, really important for people to know.
Nachman, if I could just add another thing on what
Sure.
you were just saying, which was great, especially when it comes to inventory. As you're saying, you really only want to hold like 3 months worth of inventory. Why? Because again, I'm going to quote something that is what a lot of sellers live by, and I'm sure you've heard this quote before: cash is king. If your cash is tied up in inventory and it's just sitting there, you can't use it for anything else. Buying real estate, as you mentioned, or paying your taxes. It happens so much that people will buy so much inventory, and okay, great, they have it sitting there. They're ready to sell it, and we get to the end of the year, and you're showing a good profit. And okay, now we need to pay in tax, and they don't have any money because they spent it all on all this inventory that they don't really need, especially if it's more than 3 months. So, having too much inventory can be a bad thing. And I think that's what Nachman was just going on about. And it's just really tying up your money that you could be using for other things.
Super important. Super. I like to use the example more of real estate than paying taxes, because it's
It,
exciting to buy another piece of real estate and
always,
taking that
yes, it's a
money
good
and
thing.
giving it. All
Investing.
right. So our next topic is really what my business is worth. Tim, I'll let you take it off.
Thank you. So one of the things that we also do here, and I think one of the most main goals a lot of e-commerce sellers have, is wanting to exit their business. Building up their business and selling it for a nice profit is a main goal that a lot of sellers have. And here's just a couple of things I just want to go over regarding that. So hopefully it points people in the right direction. We talked about having accurate financials. Any buyer, any aggregator that comes along is going to base all their decisions, their valuations, everything like that off your financials. And generally, they can go back 2, 3 years looking at those trailing months to see how your business has been doing, any ebbs and flows, ups and downs the business has been having. And so having that, crystal clear, accurate financials is such an important thing when coming to valuing your business, because those aggregators are going to look at it, and not that they're going to look to pick it apart, but they are, and try to find things that, you know, they're going to make a huge investment. They want to make sure they're looking at something that tells them a good story of what kind of business you have going there. And starting with accurate financials is super important. The next thing is, okay, an accurate financial is going to show you a profit and loss statement. It's going to show you a net income. And so these aggregators are going to look at this net income and say, okay, great. Here's what kind of profit we're looking at. But is that a real profit number? What do I mean by that? Are there any add backs? What do I mean by add backs? So let's say you're obviously the owner of your business and you're paying yourself through payroll. Let's say you pay yourself $100,000 and the profit of your business is $200,000. When an aggregator looks at this, they're going to see the $200,000 bottom line number, but you're not going to be part of the business moving forward. So they're going to add back your salary. So really the profit of the business is $300,000. So obviously we all can put things through our business, spend on things that may or may not be business related, which is fine. Again, that's one of the perks of owning your own business. But when doing a valuation and preparing yourself to sell your business, you don't want too much of that in there because that's going to lower your net income number. Granted, there are add backs where you can add it all back, but if you miss something, then you may be not valuating your business accurately.
Sure. For example, in your case, if they don't add back that $100,000 and they're looking at a 4x valuation, they lost 400 grand.
Correct. That's trust me, everybody, that's a lot of money. 400 grand just because we forgot to add back your salary because you're not going to be part of the business. Having somebody that understands what an aggregator is looking at is a big help. There's a lot of different people out there. That's fine. But just, making sure you have somebody on your side to help walk you through that process is very important. Another thing is that's the profit and loss side. An aggregator is going to look at the balance sheet as well. I know we haven't really talked too much about that, but kind of just showing what kind of assets you have, what liabilities you have. One of the biggest things that used to come up with when going to sell your businesses was everyone registered correctly for sales tax? Do they have any sales tax liabilities? Do they have any other tax liabilities? Again, I know I'm coming from the tax world, but making sure those are shown, those are paid, nothing's outstanding because they will do their due diligence. They will look through everything, make sure that there's no possible outstanding issues that you may have because they will look to deduct that from your valuation. So just making sure you're fully compliant. I think that's the big word is that you're fully compliant, filing everything, paying everything so that they can't use that against you. And then the last thing, as Nachman just mentioned before, is a multiple. So whatever your net income is at the bottom of your profit and loss statement, plus any add backs, gives you a number for your business. Let's say, again, it's that $300,000 number. The variable that keeps getting moved around when trying to sell your business is what multiple will an aggregator be willing to pay for your business, whether it's 4x, 8x, 2x. It really matters on what type of products you're selling, what's hot in the market right now, possibly what aggregator you're speaking with. And that's a huge factor on how much money your business can make when going to exit, is getting a very favorable multiple. And so making sure you don't just talk to one aggregator is so important. As like with anything, when you're buying inventory, you want to price things from maybe 3 different suppliers. When looking to exit, you also want to talk to maybe 2, 3, 4 different aggregators. You may get 4 wildly different valuations from them based solely on a multiple. And making sure you do your due diligence and listen to what these aggregators are selling is really important when it comes to what is my business worth.
I would just add on that I want to tie in your timely, accurate financials with business valuation. So one of the things is when it comes to exit is the way how to do a proper exit is by moving fast. You always want to move fast. You want to keep the momentum. You don't want to approach an aggregator and then drag them around. Oh, my bookkeeper hasn't finished the books. And sometimes, I always say when it comes to selling your business, it's an opportunity. And the opportunity doesn't arise. We have seen it in COVID. The opportunities were crazy. Then all of a sudden the market tanked and now it's on its way back up. The valuations are coming up than what they have been. And when you don't have a good bookkeeper and you don't have good financials, no aggregator is going to want to buy your business. Now, maybe in COVID they did, but not today. Today, everybody wants to see proper P&L, proper balance sheets. They're going to want tax returns. They're going to want to match the book back to the tax returns and make sure everything is right. When you have a company like Avask, who is an expert in e-commerce, knows what they're doing, when you get a deal, they're like, okay, let's sign NDAs, show them the business, and then you say, okay, send us over your financials. It's basically just an email. You're saying, hey, CC them, please send over P&L balance sheet, and you have what you need. If you're going to be dealing with 4 different aggregators and everybody's going to be grilling you on your financials and trying to understand, they're going to come back with a list of 25 questions. All you do is you send that straight back to the bookkeeper, and you get back your stuff. It's just going to make it so much easier. And it's very likely that the first person you will be talking to, you won't be selling. If you want to, find a good opportunity, you'll probably want to like talk to at least 5 or 6 or 7 different aggregators. And you just want to know one thing. Every time I need my numbers, it's just a phone call away. So that's really key. And what's key is also moving fast. So if your books are ready and everything is ready and you have the appropriate person who can answer all your questions, you could move within 30 to 60 days pretty fast through a closing. So our next topic is a hands-off approach. And as we are getting towards the end of this webinar, we are a little bit above time. We do want to jump into our Q&A, so we will make this little topic a little fast. But the idea is that we discussed a lot of different stuff. We discussed profitability by SKU, understanding which SKU is profitable, which SKU is not. We discussed accurate financials. We have discussed the idea how much inventory you should carry and what is your business worth. The question really is, if you find this very overwhelming, then the question is really, what is the right approach? And the answer really is by utilizing a service like Avask. Avask is a hands-off approach where the idea is it's a phone call away to get everything done. And I'll let Tim explain a little better, what happens if you find a lot of this information overwhelming, and how can they like remove the burden off your head and really just make this be as painless and as smooth as possible.
And I'm going to give a super quick, nice, clear answer to that, Nachman. So, right, hands-off approach, meaning, hey, you as a seller, you wear 15, 20,000 different hats. I mean, you've got to deal with everything. It's your business. You've got so many things. How can I get this bookkeeping, accounting headache off my plate? Can I just hand it over to somebody? Yes, Avask can do that for you. What do we mean by that? We take your information, right, and we use QuickBooks Online, and we'll connect your bank account, credit cards, anything, and we will download all your transactions. You don't have to do anything. We will categorize everything. We will ask you any questions we may have when we come across everything, so that your financials are done quickly and accurately by the end of the month, so you can have them with minimal effort on your part. That's what we mean by just a quick hands-off approach.
That's amazing. That's super amazing. And I can definitely vouch that the people using Avask are really happy because, we've been working them for a year, and it's not like the clients are changing. The clients that they started with us a year ago are still the clients. So it means they're doing something right. And they're definitely an amazing service. And as I said in the beginning, the thing I know is more from the accounting side, because I don't really talk about operation, but in the accounting side, I don't even know if perfectionist is the right word, but their stuff are accurate and their stuff are good. So let's jump into our questions over here. So Tim, I think this is a question for you. Somebody actually posted first this in the chat. They want to know if do you work with more, they want to know if you do also with companies that do e-commerce and selling to distributors.
Absolutely. It doesn't matter what you're selling, we can handle it. I've been doing e-commerce maybe about 10 years right now, but I've already told you I've been a CPA for almost 20 plus years. Before that, I handled everything, every type of kind of business there is, whether it be real estate or doctors, lawyers, anything like that. So anything you guys are doing business-wise, we can handle. E-commerce along with selling to distributors, that's not a problem. Again, and when you mention something like that, I start thinking about maybe sales tax. Again, you're selling to buyers through e-commerce. Okay, there's sales tax to worry about that. But when you're selling wholesale, there's a good chance you shouldn't be charging sales tax on that, and making sure that you could sell your goods cheaper is the first thing that would jump to mind. So having a nice conversation about that, going through what kind of business you have is something we'd love to do. But yes, we can handle something like that.
All right, that sounds amazing. So our next question is that we have, can Connect Books include ad spend per SKU? So the answer is yes. ConnectBooks does include the ad spend. What we do is we constantly pull the latest ad data from Amazon, and we pull it multiple different times a day. And we also keep it going back for the last couple of weeks because Amazon is very like interesting when it comes to ad data. It has gotten better over the years, but it's still far from perfect. Where you can look today and see that they say you spent 2,000, and then you can look tomorrow and they say 1,500, then a day later they say 1,700. So we constantly keep on refreshing to make sure we always have the latest data and we always pull in. So we will give you the ads spend per SKU. The next question is, does ConnectBooks integrate with Xero? Yes, we do integrate with Xero. And if you are interested in utilizing our Xero integration, we definitely have some promotion for that. So if you can, just reach out to us after the webinar and we'll definitely want to help you with that. Somebody asked another question. If you integrate with NetSuite, it's on a roadmap. It's currently, we do have some sort of option. I would say the best is to reach out to us after the webinar to discuss the specific need and see exactly where it works at. So Tim, the next question is for you. How does Avask handle taxes in Amazon UK?
So Avask is a global company. Now I'm speaking from White Plains, New York, our US office, and we handle all of the United States right here. Our headquarters is actually in Southampton, UK, which has over about 200 employees in it. And anyone that needs help with taxes or bookkeeping, whether it be in the UK, France, Germany, Italy, Spain, China, does not matter. We have offices all over there, and we can handle whether you're bookkeeping, taxes, VAT taxes, everything. And so if you were to reach out to me saying, hey, I need help with my UK business bookkeeping, I would get you in touch with the exact person you need to speak with.
So basically, if somebody's a US seller and they're selling the UK, who would handle the UK side? That would be the UK office, or?
That's correct. But if you're in the US and you're selling in the UK through your US business, we would handle it all right here.
So, and you guys would also handle the VAT filing and the VAT taxes.
Yeah, I sorry, Nachman. I think the biggest strength Avask has, if you were asking, is that we're the only company that handles everything under one roof. What do I mean by everything? Bookkeeping, tax return, sales tax. I think those are the three biggest compliance tax things that all e-commerce sellers deal with. And, having a different bookkeeper, tax preparer, and a sales tax software has become a big headache for a lot of sellers. And having all of that under one roof in one office where people could just talk to each other regarding all those separate issues is probably the best thing that people say is great about Avast. They just get everything done under one roof.
Yeah, that's definitely very important because sometimes they don't even talk the same language. Like the bookkeeper could do one thing, the accountant does a different thing, and they try to understand each other and it doesn't really work. And I've seen that many times. So definitely having everything on one roof. The problem is it's hard to find sometimes a company that specializes in all different things, but definitely when you do have a company that specializes in all these different areas, definitely amazing. And it's definitely going to make sure that there's no miscommunication between the bookkeeper and the accountant. So next question is, Tim. Oh, there you go. So you posted that. Okay, next question is, what's considered a healthy profit margin for e-commerce? So I'll jump at that first, and then we'll hear Tim's side on it. But I have a very interesting take on it. My take always is, first thing is understanding a break-even point. So what I like to do is I like to understand what is your overhead. And I'll just use a very interesting example. So let's say you are doing a month, $500,000 worth of sales. And let's say after your cost of goods sold, meaning the cost of the inventory that was sold, and after all Amazon fees, because I really consider Amazon fees as part of cost of goods sold, but let's say after all the fees Amazon takes off, and after your cost of goods sold, let's say you're left over with 10%. That means to say you have $50,000 left. So the next question is, what does your overhead look like? If you're running a business with 10 employees and you are doing $500,000 and you have a 10% profit margin, after all the Amazon fees and after cost of goods sold, I don't really think you're making money. But if you're running it through your basement and it's just you, then kudos to you, you're making 50 grand a month. So what I would say is a good profit margin really depends on your overhead. So the first thing is, and the real way is first understanding what your break-even point is. So for example, if let's say you know that your overhead is $50,000 a month, and you know that you cannot slim your overhead down because you're already at the most efficient possible, then you know your break-even point is at 500,000. Now, if you're doing 500,000 sales and you want to start making money, then you have two options. Either start increasing your profit margin on your existing products, or try to increase your sales, but keep your overhead the same. So I think the key is really breaking out the overhead and your profit margin. Once you understand that and you understand that correlation, then you'll understand what the profit margin. Because a simply blank answer isn't enough, because big corporate companies are running 2 to 3% profit margin and they're doing very well. Smaller businesses would have to run at least 20, 30% profit margin in order to like really breathe. What is your take on that, Tim?
Yeah, Nachman, I agree with you completely on what you just said. And it does definitely vary per company. And going down to understanding, all right, I want a good profit margin or a healthy one really comes down to, okay, what are my numbers looking like right now? What kind of profit margin am I showing? And let's say I want to show a better one. Then understanding your costs and being able to minimize them or reduce them in any little way, or just increasing your price to increase your profit margin is the key.
Amazing. So the next question is, what are actually there's a few other questions in the chat I'll just address because it's on the same topic. So the other question asking is, at what point should a product be profitable? So what I would say in that, and what I've done with a lot of customers, is I tell them that, have a game plan ahead. If you're launching new products, constantly on Amazon, have like a certain amount of money you allocate to investments. So for example, let's say you want to reinvest $100,000 a year in new products, then say, okay, I'm ready to lose on each, I want to, let's say, roll out 10 new products. I'm ready each product to lose $10,000. Then, put yourself in a game plan, how many months you're ready to lose, and then, how much you're ready to go on that. And once you hit that level, at that point, you should start pulling off the product, because by not keeping a profit on for hoping the day would come, that really doesn't always happen. So having like a block in time and knowing, let's say, okay, I'll try it out for 3 months, 6 months, but after 6 months, if it's not profitable, I'm just going to move on. That's something to do. And obviously, if you work in private label, it's going to take you longer. I mean, if you're not private label, you really shouldn't be not losing money in it. But if you're working private label, depending on the industry, depending on the product, it might take you a little bit longer to reach profitability than other ones. Okay, we are running very tight in time, so we will try to. Let's just see what else we. All right, so I'm gonna just finish off with the last question. What are the benefits of accrual-based accounting? So what I would say is, first of all, what's the difference between accrual and cash? So cash is basically just looking what comes into your bank. So if you're like a service-based business, let's say a plumber, right? So you do a service call, you collect money, but then you have a helper that helps you. So the money that comes in is your income. The money that goes out of your expenses, whatever's left in the bank, is profit. That's very good when you're a service-based business. When you're a inventory-based business, that would be impossible to do. Why? Because if, let's say, in the month of July, you, let's say, sold $50,000 worth of goods, but you purchased $200,000 worth of goods. Now, why did you purchase so much? Because next month or in the season, you plan on selling this inventory for a huge profit. So to look at your business based on what happens in your bank account and make a decision based off that is really the wrong way. Because if we were to look at your bank account, we would say this month you're down with $150,000. But in reality, you did not lose $150,000. What happened was you bought inventory that you're going to sell. So the idea of accrual-based accounting is that we look at what happened at that time frame in your actual business, not what's happening in the bank. And that's how you can really determine the profitability and see the health of your business. Tim, do you want to add anything in that?
Yep. The only other thing I would add, going back to the topics that we discussed, is especially if you're thinking about exiting your business, all aggregators only look at accrual-based accounting.
Nobody's going to do cash.
Nobody's. Yep. They're. You give them cash-based financials, they're just going to hand it right back to you. Yeah, right. They'll just say thank you, but no thanks, and move on. So you're right. You need to do your books on accrual-based accounting, especially when you're selling through e-commerce.
Yeah. All righty, everybody. We are hitting our time. We're actually 5 minutes over time, but it was really great in joining you all. And we do have a special promotion for anybody who joined this webinar. if you want to join ConnectBooks afterwards, we are offering 20% off for the first 3 months. And you should use coupon code webinar4 when you sign up to ConnectBooks. And if you have a problem with the coupon code, just reach out to the support. We have live chat available on our website, so you can just put in, and if you have any issues with that. If you are looking for more information on ConnectBooks, the best place is to visit our website, connectbooks.com. And on our website, we do have live chat. And any question you have, just put it into live chat and somebody will get back to you within a few minutes. And Tim, if somebody's looking for more information on Avask, where do they turn to?
They could email me. I've already put my email address in the chat if that's easiest for you. But if they go to our website at avaskus.com, they could find everything that we offer right there.
All right. And I thank everybody for joining. And I thank Tim, thank you so much for joining us in helping us hosting this webinar. And we will be sending up a follow-up email to everybody, plus with a recording of the webinar. And if you do have any other questions, please feel free to reach out to us. We will include contact information for Avask and for ConnectBooks. And any follow-up questions, feel free to shoot me or Tim an email, and we'll get back to you as soon as we can. Thank you, everybody. And thank you so much for joining.
Thank you.